So we're beginning to see, I think, the pressures mounting on the dollar, which is going to drive it a lot lower. And the problem is, once it starts sliding and once people begin to realize that the dollar should be sold, then it will be sold and it'll fall very, very rapidly, probably taking other currencies with it, because it is the king of fiat currencies. So, if the king is dead, so is everybody else. If you think there is the remotest chance that this is going to happen, then it just makes an awful lot of sense to insure yourself against that event by having some real money, if you like, which is only one thing, and that is tangible. It's not Bitcoin, it's gold. So I think we're getting closer and closer to the point where this is just going to become absolutely vital to possess gold.
Forecasting a swift downturn in the dollar, head research at Gold Money Incorporate Alasdair Macleod anticipates its influence could trigger a cascade effect on other currencies worldwide. While stating his perspective on financial security, Macleod stresses the importance of hedging against potential fiat currency devaluation by investing in gold. The gold price will ultimately reflect the decline in the US dollar's purchasing power. Gold's performance may not perfectly match inflation in any given year, but over the very long run, the precious metal can be counted on to retain its purchasing power, which means its price will continue to go up in terms of depreciating Federal Reserve notes. Over the last 2 decades, gold has given an average return of 11.2%, much better than the other asset classes. Macleod further observes a remarkable surge in gold prices, indicating increased interest from Far Eastern and Middle Eastern investors. Pointing out a disparity between gold and silver markets, he emphasizes a heightened emphasis on gold, propelled by a deliberate shift away from fiat currencies. Concurrently, Asian interests, notably China, are increasingly accumulating gold and branching into assets such as copper. In recent months, the Central Bank of China's persistent gold-buying spree has captured the attention of investors worldwide. The World Gold Council reported that central banks bought 1,037 tons of gold in 2023, just below the all-time record from 2022. Central bank buying activity has helped the commodities rally, but recently traders' expectations for rate cuts from the Federal Reserve have also helped fuel price gains. Regarding silver, he notes its shift from monetary to industrial use, particularly under Chinese influence. However, Macleod hints at a potential resurgence in silver demand, driven by India's increasing involvement in solar panel manufacturing. Now, we present the clips of Alasdair Macleod's insights from his recent interview with Liberty and Finance. Before we continue to delve into this discussion, please subscribe to our channel and activate the bell icon for timely updates.
Interestingly, for the last 3 trading sessions, including today, gold has risen strongly on the London morning fix, which happens at about 10:30 our time. So what this indicates to me is that you've got Far Eastern and Middle Eastern interest, which basically goes into the hands of the banks, and the banks then cover themselves on the fix as part of that process. So this is interesting because it really does indicate that even though we know that China and India and so on and so forth have been buying gold and effectively left the market really very short of liquidity, physical bullion liquidity. This is the first time we've actually seen them aggressively come into the market and buy on the fix through their agent banks. So this is, I think, something we ought to note. It's interesting also that this is specifically gold. Silver has been left behind in this. Silver, I don't know what the gold-silver ratio is. If you just, I'll just have a quick look. Yeah, you see it's up to 90. I mean, this is crazy. So this is not a silver game at all. It is purely gold. Now, what that tells me is that there are some very, very big Asian interests looking at the dollar, looking at fiat currencies, and basically wanting to get rid of fiat currencies for gold in this case. But we also see, I mean, we know that China has been buying gold, and effectively what they're doing is they're selling dollars. I mean, we think of them in terms of buying gold, but actually what they're doing is getting rid of dollars. And it's not just gold. The Chinese have been stockpiling copper. What does that involve? That means getting rid of dollars, in this case for copper. So this is actually beginning to work rather against the dollar. And the interesting thing is that you've got to look at this in terms of how the US government is going to finance its budget deficit. We know that the Chinese are not interested in increasing their interest in US treasuries. And what this move in gold is telling us is that they're actually selling dollars, actively selling dollars. So they will probably be selling US treasuries as well. I really do think that what we've been talking about on these podcasts about how difficult it will be for the US government to fund itself, I think that's becoming apparent. And this sort of flight out of gold is being reflected in dollars. We also see it in virtually every other currency. To some extent, that's probably a mechanical thing because other currencies haven't really risen against the dollar. So, they've gone down with the dollar, if you like, along with the Chinese selling and all the rest of it. And it makes me wonder slightly whether there's some serious thinkers in Asia, and I would include in the Middle East in this one, incidentally, who are sort of looking at the dollar and thinking, this is no longer where we should have our foreign interests in. This is now becoming too much of a liability. We ought to reduce our exposure to dollars.
Alasdair Macleod warns that foreign investors lacking ownership rights risk a mass withdrawal from U.S. assets. He speculates on aggressive actions, like those by Putin, escalating the crisis. Moreover, he terms it the twilight of the fiat currency system, noting high gold demand from Asian territories outside Western control. However, Macleod underscores the reliance on credit in the financial system, but warns of its risks. The analyst mentions silver's industrial control by countries like China, but speculates on a potential resurgence in its monetary value as credit collapses. Silver prices could be headed for an explosive rise in 2024 if global supplies continue to fall short of demand, and the Federal Reserve makes suitable on its plans to pivot to interest rate cuts in the coming months, according to metal markets analysts. Let's get back to the interview.
We're trapped in the UK, you're trapped in America, but foreigners who own 14.2 trillion in stocks in America, plus I don't know what the further 8 trillion or whatever the figure is of treasury bonds and all the rest of it. They find they don't have entitlement. They don't actually own this stuff. And when they wake up to it, what are they going to do? They're just going to try and get the hell out of it. So you can see that sort of action could actually bring the whole financial system tumbling down very, very rapidly. Now, whether this becomes an act of policy by Putin, or whether whether he gets more aggressive and does something like say, right, we're going to put the ruble on a gold standard, bringing the Chinese along with them because they would be forced to do the same thing. But I think either, one way or the other, I can see events spiraling out of control on the financial side, probably more rapidly than they would spiral out of control on the nuclear side. So with that in mind, I think that we're rapidly getting into a situation which is very, very dangerous for the whole fiat currency system. It's the twilight of the fiat currency system. And that also is why it is so interesting that all the demand for gold that we're seeing is actually emanating out of Asia, out of the territories which are controlled not by us, but by the Asian hegemons, because they must be looking at this with some sort of similar view to the one I've just expressed. The whole system has just evolved into this world of complete credit. Now, don't get me wrong. If we didn't have credit, we'd get no economic progress because it doesn't work on money. It works on credit. Money is the backstop to credit, if you like, which is why gold is so important. People also make the mistake of thinking that, the dollar is money, but it's not. It's credit. It's the full faith and credit that we have. Its value is the faith and credit we have in the US government. And it's that which is likely to come unstuck as the whole colossal system of credit begins to fall down around our ears. And this is why I say, if you think there is the remotest chance that this is going to happen, then it just makes an awful lot of sense to insure yourself against that event by having some real money, if you like, which is only one thing, and that is tangible. It's not Bitcoin, it's gold. So I think we're getting closer and closer to the point where this is just going to become absolutely vital to possess gold. Silver has been demonetized. It is, for the moment, very much an industrial metal controlled by industrial interests. And by that, I refer particularly to China. And I think that control may well be slipping because the Indians have been buying silver, again, for industrial purposes, because they're going into the solar panel manufacturing business big time. And Reliance Industries have opened the first phase of their manufacturing facility and have been buying silver in the market. And if anyone has looked at the deliveries on COMEX, this year so far, it's over 1,200 tons has been delivered in silver, 1,200 tons. So you can see that this sort of thing, I think this control of the silver price is actually getting away from the Chinese. And that could well drive up the price very, very sharply. And I think at some stage, the monetary characteristics of silver will come back, because when credit really does begin to fall apart, then I think people will go for anything which is tangible. And that does not mean financial securities. It does not mean owning, shares in this, that, or other company protects me against inflation. No, it doesn't, because they are themselves credit, which will get swept up in the whole collapse of the mountain, that colossal mountain of credit.
According to many analysts, gold is expected to increase in value in 2024. Factors supporting this rise include ongoing inflation concerns, the weakening of the US dollar, and increased demand from central banks. Considering the current trends in gold prices and the vulnerabilities of fiat currency, what steps should individuals and institutions take to protect their wealth against potential currency devaluation? Drop your thoughts in the comment section below. If you find this video informative, don't forget to support our channel and turn on notifications to stay informed about our latest videos. See you in the next video.